The broadcast is now starting. All attendees are in listen-only mode.
Check, check. Getting green bars, so it makes it sound like I got something. Thank you, Mackenzie. Good afternoon, good evening, good morning, wherever you be around this big fat globe of ours. Oh, no problem. Tis hump day for some, yes. Yeah, it's sad because it means we're halfway through the week already. I'm all ready for Monday to start again. Make more trading money. Yes, and it's May. No, the screen is not all black. That's just what you're looking at. Yeah, the future is bright. Yeah, I don't know, John. Are there aliens here? I don't know. Told you, I get my monthly call back to the mothership. Not your mother's hip, Michelle, but the mothership. Tell him you said hi. Yeah. So, yeah, I saw some. Is that new, Mackenzie? I saw some last year with like a couple of fighters scrambling over the ocean and they had it below them. But I didn't, yeah, I'm not much on the news lately. I've been so busy everywhere else. That's what I was telling you about the other day, about the RSI 14 with the 513 crosses. So yeah, I'll just point that out since somebody asked. You see over here on the chart on the left, oh, let me get my, and it's something you could play with. It's just a fact. Another reality of 513. So the green is the 5, the gold is the 13, or goldenrod, or whatever it's called. And what you will notice is when the 513 cross, like in this steep move down, right about here, when the 513 cross, the RSI 14 breaks the 50% line. Here you see the 5 coming in, it just barely dips, it doesn't break it, it touches it. There's the test of the RSI 14 at 50. Here's another touch, doesn't break it, but it comes right up and touches it. Oh, look at that, another challenge. And you can go back in time, and every time there's a cross down, you'll see the RSI cross below the 50. Every time it crosses up, you'll see a cross above 50. And so more reason why you want to understand the 513. Well, in some ways, it's just a nice, the RSI 14, becomes your understanding of where a turnover has occurred on that chart between the 5 and the 13. And in the short duration, there should be, assuming it actually crosses and doesn't just bounce off of it, you've had a change in direction. And obviously, when it bounces away, that's just like a cross. And that whole time the RSI is moving that way, it's just opening up. It just continues to mean there's an up move. And when it breaks it, the more it moves down, the more you have that down move. So you can learn to read that versus having to have your eyes on the 513 moving average, which also means you can put something else up there more meaningful to you, like your haul or whatever you may prefer. Check, making sure my microphone's on. Okay. I got just a massive headache, an eye headache. Been either on my phone messaging or on computer screens. And I took about a 10-minute break at 4:30, well, a half hour ago. And wow. Yeah, just no fun. Yeah, yeah, a cold compress would be nice. I like to just lay down and put a cold compress on. But yeah, that does bring relief. Yeah, Courtney has a book because she got some version of whatever it is Parker had, this viral thing. But she was telling me about her doTERRA mixture, and she got it from some essential mineral oils concoction book. So she sent me a picture of it, so I'm going to go ahead and get it at some point. Yeah, I should get some. I don't get headaches very often, but when I'm just on monitors or staring at my phone all day, I do. And as you know, my eyes aren't right, so different focal lengths challenge the stress there. All right, any questions on the 513 magic, the 513 woo-woo that we just looked at? Oh, my lordy. I do have on guard. On guard! I still have some motivate. I have to get some motivation here to push through the headache. Okay, so any questions here on the 513? That's always my go-to. That's what I grew up trading, so I do a lot of Euro USD trading, but my experimenting is done. This is an experimental. Yeah, you can see up in the right-hand corner it says test layout. So I have a couple different test layouts, and this is where I would come in and manipulate charts so I don't screw up my other layouts. It'll do it on any chart. Well, the 513 and a 62 cross is just a bigger move. It's another wave. You know, it's a larger reality. It's much like, you know, if you think, not that it is, but if you think in terms of Elliott wave, when I have that move, right? So there's a reversal here in the trend, and there's a reversal here in the trend. And yet, you know, inside of that, you have many times that there are smaller reversals in trend. So just consider this as a 513.62 cross, okay? And then this is a 513, and 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 now once again up here you have the 513.62. So the 5 and 13 can crisscross, you know, we can have at the 30-minute level, so we have our 513 cross right before the 62, so we know that's a pretty powerful turnover. And then in there, you know, you can have, because what? You're going to have pullbacks of smaller waves, right? So what happens with those pullbacks in the smaller waves? You know, it pulled back, it moves up, you know, it pulls back, whatever. So you have these 513 crosses. The 62 is a bigger move. So obviously you have to understand waveology a little to understand this is going to be, whatever chart you're on, that's going to be a shorter term wave consideration. That's a larger term wave consideration. The 62 is the absolute time period turnover. If I get to a 5-minute chart, you know, I'm not going to worry too much about 513 crosses because they could be just 3 5-pip moves, you know, in totality. If I go to a 30-minute chart, a 513 cross could be 20 pips. So it's always going to be relative to what time frame you're on. But it's fractal, so it's scalable. So, you know, even on a 1-minute chart, you'll see 513 crosses. It's just the pips in them are very small. You scale that up to a 15-minute chart, might be tradable, just depends on what you're looking at. Of course, you get to a 30-minute chart, almost always you're going to get pips out of a 513 cross. If it's not going to DNA. Now, the 513 can DNA, right? So it's not something to trade just by itself. You can use it with other stuff to try and get a sense. It's another indicator to tell you what's going on in the chart. There's no, you know, tab 29 is the closest thing to the all-round indicator that tells you what's going on. But you get confirmations at shorter time periods with other stuff that just add to it. And it's not so much that it's a confirmation for a trade, guys, as much as it is your understanding. So once you understand what's going on, you've got it beat. You're done. And so the tools that I present, people are like, well, where's the strategy? Where's the steps? When do I enter the trade? You know, we can do that for any one thing. But more importantly, I'm trying to give you tools so you mature as a trader, so you become that Jedi. So you get the eyes that you could look at a chart with tools that you put on it. So you put a 513 on it. Oh, you put a haul on it. Oh, you have tab 29 on it. Oh, you have a pitchfork on it. You know, and all of a sudden, you can pretty much tell what the hell price is doing and where it's going. Yeah, can you just do a live room and trade it for me so I could take the entries? No, but Clay said he would. Clay and Mackenzie, they're going to alternate. Kenzie just stepped up last few days and said she wanted to do that. Is that Nicole's? Is that how you pronounce it? Is it pronounced like Nicole's? Oh, Nicola. Isn't that a cough drop? Nicola. What is that? Oh, that's Ricola. Well, Mackenzie, let your dad alone. Let him listen. Nicola. 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 Oh, Ricola. Oh. Yeah, well, that's just, they do that for the commercial. I'm sure Stuart does that to his daughter. Nicola. So the 513 crosses are, they help you gauge smaller wave turnovers. And if you're on a 30-minute chart, they're going to give you a little bit more indication. Now you can get, times of day where 513, like in here, in this consolidation, you can say not much help. They're just DNAing, essentially. The real place to look for 513s are when they cross the 62, as we said. It marks a pretty significant move. And look at the challenges to the 62. Boom, boom. Not in price action, but with the MAs. And every time it checks it and moves out impulsively. Look at that. Boom. 513 starts to separate again. Big move. Continues to separate, starts coming back when it's consolidating. So you want to be able to read that. You'll be able to read the separation and the pullback of the MAs to help you understand. Depends on how soon after, but yeah, sometimes you'll see them going to the extremes, the waves, depending on what time period and again what size waves they are. But after the 513.62 cross, very often you will see a convergence at the high end just because that impulsivity is so great. There was a I didn't realize that I had it on this one too. I was looking at this the other day. I don't know if you remember, we drew this like eons ago. And there were so many good things with this. We drew it. Well, let me see. Yeah, it was towards the beginning. It might have been halfway. I think we had this touch down here to help align it. It was originally, if you remember, this was originally off a scan. And, I was watching it the other day, looking at it the other day, and saw this. And I just had a laugh. There's a pass and check right there. And look at what happens. 513.62 cross, and then boom. So it just depends, what you're trading, but it's a very valuable tool. Very valuable tool. And it helps you to understand that in the context of moving forward, as you open up the time period of your trading and the pips that you have once you secure something shorter, that these pullbacks are understandable as you know, until the MA, you know, the 13 crosses back below now on a 30-minute chart. Keep emphasizing this because of the pips that would be relevant. You know, so you're gonna incur these drawbacks, these pullbacks, these drawdowns, in order to stay for the long run. And so you're going to have those erosions, and they get re-earned, and then you have erosion, they re-earned. And it's not until the 13 crossing, you know, well, of course, any kind of, you know, move like that you'd be out of anyway, announcements, etc. But it's good to just understand that you can't expect as a trader to see price. While you rationalize this to me, it's still not what you expect. You still kind of expect that kind of move. And when you have the slightest bit of pullback, you're like, I'm going to exit. It's red. Candle turn red. I'm out of here. That was a 30-minute chart, and we're running the 513.62 on it. In their standard colors, green for 5, gold for 13, aqua for 62. If you're not familiar with 513.62, watch some of the past sessions. So it helps your mindset to understand, and you want to start looking for this stuff. You know, you want to start observing it. And the tendencies around the 513.62. So a good example here, you know, you have a breakdown, it DNA'd a little, it finally breaks down. You see the 13 separating, the 5 separating stronger. So you're pretty good. And then we're coming back up, and the 5 crosses back over the 13. But if I'm in a 60-minute move, I'm still not worried until what? Right here. That's where the 13 finally crosses back up. But look at what you endure to stay in that trade long term. You're going to have a 50% pullback or close to it. That's surely 38, if not 50, probably 38 too. Almost be fun to measure. I'd have to open the screen up a little to get this precise because I'm seeing 2 lines. So there's the bottom. Yeah. Real close. So what you notice, what I want you to notice here with this is, watch this. So you're going to have that big pullback. Oh man, I'm look how I'm, oh wait, it's pulling back again. There's a second entry. It's also a 30-minute convergence, which confirms, you know, it's a steep, hard retrace. It's a steep, hard retrace, but that's a second entry. So now all the crying about, oh, I lost so many pips to stay in this longer term trade. If you don't want to stay in longer term trades, then get out. But if you want to get hundreds of pips in trades with your 2% to a 10 pip stop loss, you know. Yeah, and this because the 4-hour wave didn't pull up that much here, the green one, this is essentially, it is a convergence, but at the larger level we call it a sell into the buy. Because we're selling into the 4-hour going back down to a bottom wave, for which we achieve the final convergence down here, as you can see. But these pullbacks, when you watch the 62 enough, whew, you know, that's something you just to die for. Because what happens after a 62 bounce? Unless it's going to snake, and it can, unless it's going to DNA wrap around it. It can, but inevitably a retest like that has a pretty strong impulsive move away from it. Which means what? It means in short order, if you banked on that, if you're using the 62 as a turnover, what are you using for your stop loss? I don't know. DNA. Where's my scientist in here? D something nucleo blah blah blah. Yeah, DNA. Savings time. Daylight savings time. Yeah. Deonuclei. I don't know. Google it and pronounce it for me, somebody. Well, that's what it is. It's DNA. Have you ever seen a picture of a DNA? How it wraps around itself and twists? Well, that's what price does to the 62, and we call that a DNA spiral. Yeah, so thank you, Doug. Glad somebody finally answered it. The stop loss is on the other side of the 62. Again, depending on scale, it could be 5 pips, could be 3 pips, could be 10 pips, just depends. And on our indicator list, we'll have it here shortly, but we're going to have, an indicator. It's just 62 plus or minus, and it'll draw you the stop loss with you. As whatever the 62 does, it'll do it. Deoxyribonucleic acid. Thank you, Henry. Yeah, what he said. Thanks, Timothy. So we don't have a lot of tight DNA. There's a little bit here, but it's it's almost just all resistance here. It's not really wrapping itself around. You'll see it wrap around a lot of times, before news, but we didn't have that today. But it'll wrap around it, and when you get to the 5 and the 13 wrapping with it, my mouth's so dry I can't even beatbox. Yeah, so when the 5 and 13 are also wrapping, then you have a pretty pronounced DNA. But, so my point here, where was it? On this touch, or this bounce, this rejection, you don't have to go very far. Don't have to go very far, and yet, you've locked in profit. So now I've got 2 trades running. Gives me more opportunities for legging down. Maybe I come to this first one and I go, whoa, look, it's a 4-hour convergence. Maybe I'll exit my first trade, or I'll exit 80% of my first trade, or whatever. You just have a lot more options. But they're both locked in profit. So these bounces are great. Very low risk, because you already have profit from your first trade. So if this stops you out at 5-7 pips, it's really, that trade doesn't go down as a loss. It does in the trading station, but as a group trade, as I like to call them, you're still very positive. Yeah, it's big scale, especially without zooming out. What is it? 20 pip, yeah. Thanks, Clay. So I think you have certain things like the 5-13-62 relationship that I notice sometimes when we talk about them, people will send me charts and, oh, I got this trade off the 513.62. And it's like, no, I never said there was a trade there. What I said is they're confirmers, and they're really more storytellers, right? Yes, there are, Hayden. You can go into the Files tab at Scans, Forks, and Fibos and look at the DTTV archives. A 62 bounce? No. I'm not looking for anything more than that. Because, look, here's the deal. And we're on a 30-minute chart. Where's my mouse? Got away from me. But, we've got harmonic wave convergence going on. So, I don't, it's not so, the 62 is just it's the place of occurrence. If I'm watching this down on a shorter term chart, I am seeing a convergence. This will show up as a 15-minute or a 10-minute, show up as a 5-minute. I may or may not, have the desire or the ability at that time to execute it at low, 5-minute, 1 minute. But it's the same. It's no different than saying that was a trend line. It's no different than saying it was a pitchfork line. It's whatever your tolerance is, typically with a 20 pip scale, and you have a harmonic wave convergence. That's why it's so powerful. Two what? Man, oh. I can't. I'm going back and forth between two monitors at different focal lengths, and it's just really straining my eyes. Yeah. So it looks like it touches there too. And another convergence. And that's a super strong one. Why is that one super strong? Even for you guys that don't have tab 29, just fast 33, why is that a super strong one? Let me see my tab 29 students tell me. Give me a little bit more than that, though. Yeah, there you go. So Todd's got it perfectly. So yeah, the 240 is snaking, but look at what happens in this pullback. So the 30-minute wave is pulling back. At the same time, the 240 wave is still going up. This whole time, price started to pull back. Look at the 30-minute wave. This little tiny move here. And look how far back. That's how we know it's retracing. Retraced 100% in the indicator. How far did it retrace from here to here? 38.50. But 100% in the indicator. So we know it's a strong retrace. But the clue here is you've got a 4-hour wave top that it's going against. And so this is your ultimate slingshot. This is a retracement back. It's just it doesn't look like it's that big of a, it's that significant. Because the retracement itself is small. People might think, oh, look, I have a big move up. Oh, look at that slingshot move. It's going to take off from there because it pulled back so far. It's got to go quite a distance just to get back to where it was before the retrace. These smaller pullbacks can often have just this huge rubber band pulling it back. And as soon as that thing finishes and starts turning around, this thing is going to take off. So don't, again, this is just watching price action in the waves. Don't get, you're sitting here watching this. If you don't have the 62 on here, you might not be paying attention to how strong of a pullback that is. But remember, we talk about the 62, and there's no real, how would I say it? There's not a statistical inference in terms of the 87% because we have to cross the 34 and the 21 shadow bands coming back down. But just know, being the middle of the road, there are a lot of tests of the 62. it is a hard barrier. It is frequently a hard barrier for price to cross. Look at all the effort in here it took to cross. I mean, how many consecutive candles, was the 62 holding price until right in here we finally cross. So it's really strong. A couple challenges in here. So when it pulls it back like this, you can have a 6-week-old sapling and you grab it by the top and pull it over. There's not tons of sponginess in it. Give me a 6-month sapling and I pull it back, and I don't even have to pull it back but a third of the way, and it's got a lot of spring going back the other way, doesn't it? It wasn't 2 waves, it was a test of the 62. We're talking about this down here, this 4-hour wave, and the half-hour wave is pulling back against it really strong. And in that time frame, the half-hour wave was pulling back, the 4-hour wave was still gaining strength going up. That just means this move down is going to have an end. This is a retrace. This move down is going to have an end, and it's going to slingshot back up when it's done. And it actually gets down here to the extreme and flips around. Very strong trade. Good eyes, Clay. Well, so it depends on the news. How does news impact it? But I've taught this for years, and it's why most news traders and most news system trading stuff is kind of like, So we've got this thing called Elliott Wave. And Elliott Wave always is at play. And I will emphasize that with a couple of underlines. It's always at play. It is not a sometimes thing. Now, as amateur Elliottians, or ignorant Elliottians, which 99.9% of us are, we can't typically very reliably do forward counts. We can go back in time and see what happened some of the time. The more understanding you have of Elliott Wave, the more likelihood you're going to be able to go back and see something. But what always is happening is Elliott Wave is always at play. And so if it's always at play, the question is news an exception to that rule? By definition, it can't be. So what happens is, now again, I did a rather lengthy conversation in one of our, I think that was in one of the AI groups a couple weeks ago, or maybe last week. Let's talk about this real quickly. This is a good general understanding. So those of you who know this, good review. Those that don't, pay attention. If we are looking at a Euro USD chart, ask this one more time. I think I've done this recently. Which is the basic pair between the Euro and the USD? In terms of the quoted pair, these 6 characters up here, 3 of them are the quoted pair. Which is the 3 of them are the basic pair. Which is the basic pair? Euro. That is the basic pair. What do you mean by basic? It means its value doesn't change. The quoted pair is the USD. Which is why when you look at the side of the charts, those are dollars. $1.13. That's 113 USD. It takes $1.13 of USD to buy 1 euro. So when this chart goes up in price, so if I'm looking at my price and it goes up, what's happening to the dollar? The value of the dollar is going down. Because now, when price is up here, oh looky, it's $1.27. Now it costs $1.27 to buy 1 euro, i.e. the dollar's gotten weaker because it takes a lot more of it to buy 1 euro. Yeah, but in terms of, if we're talking about the dollar, we have to freeze the euro. There are, you can arrange the pair to be USD euro. But it's always, the reason it's basic is because the unit stays the same there. Quoted because it's the one whose quote changes. Consider, instead of euro, this is 1 loaf of bread. We only refer to the bread as being more in value or less in value relative to the dollar. But if it takes more money to buy the same loaf of bread, the value of the dollar has gone down. So price up, value down. All right, now let's talk about NFP coming up on Friday. First Friday of every month. Non-farm payroll in the United States. Probably one of the biggest things that consistently will move price. So you have something called consensus, which is, just as it suggests, it is sometimes it'll be called forecast. It is an estimate of what numerous sources think the result of the announcement is going to be. So if you look under consensus, and it says there's going to be 180,000 new jobs were created in the month of April. That's what all the analysts are projecting. Then you have an actual column, which you can go back and look at historically. So let's say they come out and say, oh gee, there were 220,000 jobs created in the month of April when they finally did the actual tally. So the performance in the actual numbers was greater than the prediction, than the forecast, than the consensus. That is a strengthening of the dollar. The dollar will get stronger because of that. More jobs were created than everybody thought. Yay! So if the dollar is going to gain value, what do you expect price to do on the charts with that announcement? You can expect it to drop. Because that's how the dollar gains value. If it goes up, it loses value. If it comes down, we're going to gain value. So then, come Friday, if the forecast was 180, I haven't looked at it, I don't know what it is. If the forecast was 180 and the government says 220 were added and the value of the dollar goes up, but when the announcement's made, instead of price coming down, instantly we see it go like this. Why is that? There's where the announcement was made, right there in time. Why does price go up? because news does not impact Elliott wave. So if we were in the middle of, let's say, a 2 to 3 move, the Elliott wave that you're in has to finish first. The only thing news does is it grabs the right-hand side of that chart and it moves it to the left. It compresses the time to get there. Normally, maybe it would take that wave, a week more to get up to that same value. So what news does is it compresses the time. It doesn't change the price. It looks like it does because what happens? You're watching price. Come over here to the left. You're watching price. News announcement, ching. So we go, oh, look at that. And yet if there was a pitchfork on that, if there was a fork fibbo on that, all of a sudden you see, oh, look, there's the 2618 projection. It hit it, it bounced off of it to the pip. The news didn't know where that line was. It was in an Elliott wave 2 to 3, and that was the projection from the 1 to 2 move. They projected it up there. Exaggerated my wave 1. So, which makes it really challenging because most people, as I said, can't do forward counts. And so you probably don't know where the wave is currently. But that's the first place it's going to go. This is also, and I'm going to erase all this. If you need to take a screenshot of this busyness. But we talked about, in this case, we went from 180 forecast to 220 delivered. The dollar gains value, therefore the price drops down. That's the eventuality. And so what you'll see then in the news is what? If we were actually finishing off that 2 to 3 move, and the 3's projected up here, as I said, instead of, the continued path where it eventually makes it up there, what you see happen is, and it turns right around and comes down. When it makes that kind of move, where do you think it's stopping down here? If it did all that within a couple half-hour bars, where is it stopping down here? Yeah, if it's deep enough, it could be the 4 wave. So all the news did was we had a 30-minute bar up and 2 30-minute bars down. It just completed the 3-4 wave, just like it would have if the news didn't happen. But if the news didn't happen, it would have been out here, and then it would have down here. So the news, as I said, it just compresses the time. The amplitude doesn't change. And that's exactly right. So basically the news doesn't help us for bloop. And that's why very often people are like, oh, I don't understand. We increased jobs. Why did the dollar lose value after the announcement? It doesn't make any sense at all. It makes perfect sense because it's going to finish the Elliott wave that it's in, because Elliott wave's always there. It's not a part-time thing. It's not a sometime thing. It's there anytime except with red folder news. Orange news, oh, it wants to change it, but no, it doesn't. Red folder news, yeah, it changes Elliott wave. No, it doesn't work that way. So if the eventuality is the price should come down as a result of the announcement, it will, but it doesn't mean it won't go up first based on whatever Elliott wave it's in. No, news announcements, look, the more you spend time on the charts, the more you spend time in here, I didn't do any looks today because I was occupied elsewhere, but if anybody was on the charts and you have done setup work, you will see the FOMC announcement. The news today will hit Fibbo values, will hit pitchforks. It's going to be there. Those numbers don't go away. It's just we think the news is this random thing that's unpredictable in nature, and so we go, oh, look at that, it reached up and touched this. Yeah, it reached up and touched the wave 3 projection point. Yawn. But it looks amazing because we have this presumption that news is random and volatile and unpredictable. Now, if you have a combination of indicators on your charts, you've got pitchforks, and you know where your energy points are, and you have harmonic wave convergence on your charts in some form, FAST 33, tab 29. Well, we don't like to predict anything. We just may have some. See, the thing is, how are you going to know if it's going to stop at 1618 or 2618? By harmonic wave convergence. Because you'll see it's not at the top. Or if it's at the top and you have a little bit of a pullback, you'll see the pullback is a retracement. That's the cool thing about harmonic wave convergence, is you can actually see, as I said the other day, when I have a move up and it starts pulling back, this doesn't have to come very far down before we already know whether this move is a retracement or whether it's a full-on reversal. And we'll generally know in this area right in here with harmonic wave convergence. So if this was the 1618 target and it bounces off of it and starts coming back down, we'll know pretty fast whether that was actually the top of the move, was that the actual top of the Elliott wave, or whether it's going to go higher, because we can read what's happening in here. Just like when we were looking at the chart, we can tell that this pullback here was a retracement. And we know that because if I measure from here, well, black ain't going to show up real well, will it? If I measure from here, which is the last bottom, and I measure to the highest point and pull back, that's probably a 38% retracement. And yet, what did the wave do? It pulled all the way back 100%. So, very disproportionate. Essentially, we're saying by the indicator, there's not much room for it to come down farther. It can't come down that far. There's no room. It's run out of room in the indicator for it to do that. So that disproportionality that exists, 38 versus 100, we know this is a pullback. And then, not only do we know it's a pullback, we know when it ends. So we know that's a pullback. We know it's going up higher. So if this was the 1618, hey, maybe 2618 is it, or whatever the next, Fibbo projection is for Elliott Wave 3. Yeah, but just use another word other than predict, because predict and believe and expect and anticipate, we don't do that, while price is here. We wait until it's coming back, then we'll have the data to tell us it's going higher or it's coming back further. So it's, there's a difference between looking at the chart in real time and letting the real time indicators tell us what's going on. See, the thing people don't get about harmonic wave convergence, because it's real time and they don't understand it, they get real snide and it's like they'll say here, well, if you're so smart, if that's so good indicator, tell me where it's going next. And it's like, well, it's probably going to pull down a little bit further because I can tell this move up is a retracement back up. And so that means there's going to be more energy coming down a little bit more. But that's not the point. It in real time is what we can evaluate. I might say, oh, it's going to come back down, maybe go up just a little bit more, and it's going to come back down. And 20 minutes later, an hour later, I'll look at it and say, no, it's going to go higher. Because real time means just that. Real time doesn't mean I could predict 8 hours into advance what it's going to do. Real time means, oh, for the next 30 minutes or so, I can tell you pretty precisely what it's going to do. And then when I get there, I can tell you pretty precisely for the next 30 minutes what it's going to do. And when it gets there, I can tell you pretty precisely for the next 30 minutes what it's going to do. But I'm not going to sit here and tell you what it can do in 8 hours because things can change. That's the benefit of real time. That's the big separation between new paradigm and old paradigm. And then in the old paradigm, you have to bet it's going to go there in 8 hours or 16 hours. That's the whole bet. And you make that at the very beginning. And then you're committed to it. That's the difference when you have real-time indicators. Yeah, it's a real-time crystal ball, though. You're in that, gypsy tent, and it's not so much that in 10 years from now you're going to have 3 kids. That's old paradigm. She's saying, hey, when you leave the circus or the fair here or the carnival, watch out for that city bus. She's got a pretty accurate view. It's just real short term. And the reason we don't want to wed, W-E-D, the reason we don't want to wed ourselves to forecast is what? Why don't we want to, oh, well, it should go here. Why don't we want to do that? Yes. Good job, Mackenzie. Because it's going to program your RAS. Remember, if I say right here, I think price is going to come down here. And this is why I love these traders that have been trading 6 months or a year, and they mark up charts and they post them, and you've got their 4-hour support and resistance, and price is just breaking that point there, and they do their, oh, it's going to hit here and then it's going to bounce down, and maybe it bounce up again, come down, and they're doing all this forecasting from this point right here. So what happens is RAS, remember what RAS is? It takes history, events, environment, results, and programming, and filters based on that. So at this point here, where I'm saying, oh, I anticipate it dropping down here, it locks in that. Your brain hears your voice saying that. It conveys that to the crew. And now what happens is the crew is filtered, because remember, too many billions of bits of information. Your brain can't process it, so it has to use a filtering mechanism. That's what the whole sensory information gateway process is about. If you're human, you're subject to it. There's too much information, so it has to have something to filter the information. So what your brain's going to now tell you is, hey, all those signals that may be on the chart saying price is going to go this way, don't show it to him, because he's told us price is coming down here. Only show him the things that confirm what he told us price is going to do. So every time you set and even say the words in your head, anticipate, expect, project, forecast, this is where it's going, however you want to phrase it, you are programming your RAS to not show you anything different than that. It's not so much as a better answer, it's the answer. It's how it works. This is, I've joked many times, well, not joke, but I marvel at many times how in years past, the understanding of this wasn't there. Neuroscience as a field wasn't there. They just didn't understand all of the brain physiology. They might have understand it from an anatomical perspective. Oh, there's something funny and looking different in this part of the brain, but they didn't know what it did. And nobody even envisioned these sensory information gateways. The whole neuroscience field, the whole understanding of the brain, technology has led us there. But that whole field is it's less than a decade old as it really sits today. So this whole understanding of RAS wasn't there. So in years past, there would be things like, ancient wisdom, old wives' tales, all that stuff that really described the reality of RAS. How about the wisdom in, and exactly what I'm saying here about predicting where this is going to go, how about the old wives' tale or wisdom about don't judge a book by the cover? What do you think that's about? See, if somebody makes a negative impression with you by their appearance, your RAS shuts down the opportunity to see a lot of good things about them. Sometimes you eventually do. Might take time. How many times have you caught yourself, 3, 6 months, a year later, and somebody that you originally wrote off, maybe through other friends or whatever, and you sit there and you have this conversation with yourself that goes something like, man, I really misjudged them. They turned out to be a really cool person. So the whole don't judge a book by the cover is really a solid explanation of RAS. It's just they didn't know what it was about. Well, that's the other half of it. You don't know what they're going through, right? Well, yes, that's true, Mackenzie. Sometimes Prince Charming can be a real jerk. So it does, I think we can all acknowledge that at some point. Oh my God, he's so handsome. Yeah. And then you turn 27 or 30 and you realize that's not what it's about. Guys sometimes longer. They have to get to maybe 65 or 70. But women usually get it faster. That's all RAS, guys. That's all it is. I'm being generous with 70. Yeah, maybe. That's all it is. That you don't want to program a set of conditions that you believe are going to happen, because then things will be filtered out. It's once you understand how that works, it can change your life. Yes, exactly, Clay. Life is RAS. Or flip that around, RAS is life. Yeah. It is a good one to put on a shirt. Royalties, please. You and your royalties. So anyway, that's why when I see younger traders, but younger traders with egos, doing their 4-hour markups and dotted lines and arrows as to where price is going, they take a hard fall. And you'll hear people say, I don't understand why I thought it was going there. Can't they see blah, blah, blah? No, they can't see it. They don't see it. Their eyes glance right over it because their brain told them not to process that information. Yeah, I'm not picking on age as much as young in truly just time as a trader. I see 40, 50-year-olds doing the same thing. And this is why it took forever. I'll tell you where I learned to get past it. It was with my Titanic trade. For those that are familiar with the Titanic trade, way back when. And it's because who knows how I would analyze that trade today if I had it, if I had the technology I have today. But I kept reading. I was worried, that I should not stay in this trade as it continued to dive and dive and dive. But every analyst site I went to said we're at the bottom. So what happened by me going to those analyst sites is it provided more programming to say it's going to turn around because the analyst said so. And let me read another analyst site and read another one and another one. Oh, it's turning. We're at the bottom. It can't drop anymore. So what's that mean as I go back now and look at the charts? The things there telling me it's going to drop more, I can't see. My crew is not allowing me to process it. So one of the, people will ask me, what do you think about this analyst site? And what do you think about that analyst site? And, it's like, oh my God, I almost think the brokers who sponsor most of those sites understand RAS completely. And they're going to have you so confused that you're going to be dead wrong, which is how they make their money. You haven't, Clay, you haven't heard the Titanic? Oh, wow. Okay. Let's just say the trade earned its name. Yeah, he's too young, as always says. Yeah, I think Clay might have been running around in his nappies, as you Aussies would say. But it's all about RAS. And so, no, I was in a buy on the Aussie USD. And it was just tanking and tanking and tanking. Yeah. And it was just bad all the way around. But that was, as they say, there's a silver lining in every bad situation. So that was pretty much the end of losing trades. Because I, became very selective in criteria, became very disciplined, and never, ever, ever after that moved to stop loss 1 pip. Nonetheless, 50 at a time every half hour. So without the Titanic, I might not be here today. You might turn on the internet and I'd be selling real estate flipping courses. Yeah, if I had a 3 pip stop loss, definitely would not be here. So anyway, don't forecast, don't make expectations. Always be real time in your understanding, because that's how you're going to keep your mind open and your sensory information gateways cleaned and not programmed against you. Well, so there's a question being asked. So Steve, how many confirmations do you usually have when you want to enter a trade? Who wants to answer that? Thank you, Beta and Stuart. How many confirmations do you usually have when you want to enter a trade? All right, so let's think about this. That's the answer. Clay has the answer. Well, he does and he doesn't. He stated the answer, but you put together everything I've taught. See, your RAS is working right now. I love this when this happens. So your RAS is working right now because you see this is like a pop quiz question. It really is the final exam. What's the difference between a pop quiz and the final exam? The pop quiz asks you based on right now, what you most recently learned. The final exam says what? You must put everything together that you've learned this entire time. It's a final exam kind of question. I'll give you 30 seconds more. Because it's, so yeah, that's not what I wanted. Here we go. My phone was being real sloppy. I was trying to get on my phone. My phone was it was like semi-frozen. All right. The answer is, I'm not counting because I'm trading subconsciously. I just recognize they're there. Does that make sense? I see what you did there. Yeah. Yeah, Tim, you did, essentially. Yeah. So it's a good question. It's a conscious mechanical question. And the way you get there is through volume of trades or, volume of incidents, right? Load up your charts, load up your pairs with a 30-minute chart, put the 30-minute 62 in aqua blue, Dodge blue, whatever the color is. I think it's an aqua. And go look at them for as much data as you can, one chart at a time, and look at the relationships with price and the 62. Put Fibos on it. measure when it's 38, 50, 61.8. Look for checks and rechecks of the 62. And go through 12, 16, whatever pairs, week after week after week in history. You can do that on a weekend. The cool thing about things like pitchforks and moving averages is they are real-time indicators. And so when you have a bounce off the 62 EMA real time, when you go back and look at it 3 weeks later, it still touched it at that time. It's not like a MACD or an RSI or even our harmonic wave convergence indicator, where if there's wicks, you can't trust the indicator because the indicator shows you the close value. It doesn't show you the high and low values. So things like interaction between 513.62s and 62 bounces, you don't have to be real time, and it's 100% accurate in history. And so you can go familiarize yourself really strongly with what happens with price when it crosses the 62. What does it do? What tendencies do I see? And then when you see something, note how that thing is consistent every time you see it. It doesn't mean every time you look at it, you're going to see that thing. But when you see that thing, how consistent is it? What do the waves look like? What was the Fibonacci really at? And so you can super accelerate the process. You know, if you think about Clay, with the Clay way, that's how he rediscovered it. Was I'm looking at one thing and I'm observing the patterns elsewhere. So you're seeing these relationships. You tend not to associate them trade to trade to trade. But if you have nothing but those associations, if you have nothing but those things that you've identified, and you see hundreds and hundreds of them, it really makes it's a real strong programming. There's 3 EMAs, 1, 2, and 3. Oh, these are EMAs. Only thing we use are EMAs. And for your indicator, you're going to have to go to not exponential moving average. You have to go to moving average exponential. Moving average exponential. And then 5, 13, 62 is your input values. No problem. All right, so we covered a lot of stuff. Time goes fast when we get deep. But we talked about news, we talked about 513 observations, and generally, if you move up in scale, 513 crosses can be reflective of good things. You just, you don't want to do it in isolation. Use your indicator. 513.62 cross is pretty powerful. You can anticipate rechecks of the 62. This will be interesting. Let me just do this before we... Oh, well, yeah, that'll be valid. No, that'll be down. I don't know. I can't do it here. I can only do it on IntelliCharts with the indicator, and it has to do with TradingView. I was going to show you something, but I can't now that we had the cross down. No, it's PC. I don't have anything out DT. As always says, you can anticipate trick questions from Steve. I like to mix it up because, see, RAS, if you anticipate it, then if I ask a question, you're overthinking it because you're trying to figure out how I'm tricking you. See, the RAS is always at play. Right. But it is fun, and Zoe knows, Tim knows, they've been around forever. You know, I do sometimes use my understanding of your RAS to lead you down a path to where you think the answer you're giving is the correct answer, but I actually led you to give that answer. And then when you give it, it's like, surprise! Because you have the reptilian brain. Duh. There's nothing funnier than Noah St. John. Oh, anybody was down there? When he was holding his hand up, making the fist and twisting his fist left and right for your reptilian brain. It became kind of an inside joke at that conference. That was hilarious. Oh my God. All right, so Wednesday might be the middle of the week, early Thursday for some, but it is the last live session this week. Working with the educators, the coaches, we're working on a schedule. We've had some more dialogue this week. We're getting close. And I think maybe by mid to end next week, we'll be able to announce additional sessions. And so we're kind of excited for that. The RSI indicator, one last time as we close, for those of you that came late, this left over from something else. This is one of my laboratory layouts. But I was showing somebody the other day how when you run an RSI at 14, which is what? Half a lunar cycle. That's why it's there at 14. When we run RSI at 14, and I have a 5 on the chart, green EMA, and a 13 on the chart, yellow MA, that when they cross, the RSI will cross the 50% point. And when they bounce, you'll see RSI bounce off the 50% line, which I have there in yellow. So the 513 crosses. Equals a 50% RSI 14 cross. Just some of those fun facts to know and share at cocktail parties. So when somebody comes up to you and, inevitably, because you trade the Forex and you say, oh, that's the currency market, they will name some really wild thing that we don't trade. What's the peso at today? I don't know what the peso's at today, but did you know that when the 513 crosses and you have an RSI 14 on the chart, it also crosses the 50% line? So you can amaze them with your magic tricks of knowledge. All right, guys. I've got 3, but the 2 Forex related ones are getting closer. That's what I'll tell you, Henry. Yeah, you'll be the hit of any party. So what else was I going to say? The educators. Yeah, so we're good. Get your friends here. So with that, remember, life can be short and sometimes even shorter than that. So for the people you care and love, let them know you care and love them. I love you guys for carving out time and being here. You Aussies are fantastic. Everybody's fantastic, but the people making sacrifices to be here live when they could sleep or do something else and then just watch the replay, your commitment to being here is outstanding, and I appreciate it. I really do. So with that, I'll see you guys in Facebook land, and we'll be back Monday. Have a great weekend.